the country, they want more growth now, they want bigger numbers, and they made some controversial moves in the past to get there, but they are changing gears, they are switching methods now in an attempt to get bigger growth. Even though Japan has mountains of debt, they understand that they need to raise rates now in order to support their currency. They're import heavy. Bank of Japan is raising interest rates in an attempt to help its struggling currency. Japan raised interest rates above 0% for the first time since 2007, 4 months ago, and just recently Japan has raised rates again to 0.25%. And this was an expected move, and this is all in an attempt to try to help the yen, to try to prop it up. So let's deep dive into this a little bit. Now, before we continue, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. The UK, Europe, and Canada have all dropped interest rates recently. The United States is flirting with the idea, and they soon will join the party too, and they will be dropping rates. Japan is in a completely different financial situation. When all of these countries were raising interest rates to fight inflation the last couple of years, Japan never did so. And Japan was actually the last country to stop using negative rates. And even now at 0% and 0.25, their rates are just way lower. And even though Japan has mountains of debt, they understand that they need to raise rates now in order to support their currency. The financial situation in Japan, it's just different than a lot of the other developed countries across the world. When you think of Europe as a whole, but really, France, Italy, and all of them, but there's the European Central Bank, so you group them together. The United States, UK, Canada, and these other. Japan is just in a different situation, and it was a controversial move for them to keep rates negative for so long, and it was a controversial move for them to be so low when everybody was moving in a different direction. But they were fighting they were fighting deflation, and they were just a different battle within the country, just because a lot of these countries are developed countries, and the developed world and economies that are multifaceted doesn't mean that they're all the same. They don't grow the same or move the same. Japan was always in a different situation, and keeping rates how it was might have been a mistake by their central bank to not kind of move along with everybody. And obviously the way that the yen has struggled is a big consequence of that. Now, right after this rate increase, the yen did prop up compared to the dollar, as was expected, and which is a welcoming thing as well. And when the Federal Reserve does decide to finally start to drop rates, and if they do so on a continual basis, and Japan raises rates even a little bit more, it's just going to stabilize the yen even more than it is now. A little bit of activity was expected right after the rate hike, and you hope to see it continue to go on. But Japan has kind of dug itself into a hole that it is now trying to climb out of. And Japan is going to move very gingerly moving forward with the mountains of debt that they have piled up as far as the country goes, and them fighting deflation for so long. They are going to move very cautiously when it comes to rates moving forward. But the country, they want more growth now, they want bigger numbers, and they made some controversial moves in the past to get there, but they are changing gears, they are switching methods now in an attempt to get bigger growth. And we'll see how these things play out. Now, more rate hikes are probably expected, but again, Japan is going to move very cautiously. I don't expect them to raise rates anytime soon, not at their next meeting or anything. Now, again, I could be completely wrong. It's not financial advice or anything, but I think that this rate hike, it's the first time they've been this far positive since, I was a little guy. But they will move very cautiously. But I do think they will raise rates even further than this. But again, when the Fed moves, it's going to help. But, different things with Japan, they import a lot of their oil. A lot of food that they consume that gets imported as well. Honestly, the majority of the oil that they use as a country gets imported, and other goods, they're import heavy, and it hurts them when their currency is down compared to the rest of the world. It makes those imports more expensive, and a lot of those prices just get passed on to the consumers. So gas and other things are more expensive to the people there, and that runs the, what is the consumer spending going to look like? Those numbers get looked at, and for the most part it hasn't too much affected things. Spending is still healthy. Households generally have like a decent amount of money. Household debt and income levels are not bad in Japan, but with it being so import heavy, there's even a more urgency for them to stabilize their currency, which they are in the process of doing now. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.